two important things I want to touch on here, okay? First one is, are we really that convinced that CPI is going to be hot, okay? If we go to trueflation, right, which obviously trueflation numbers are always going to be a little different than the government numbers. And once again, trueflation had us back at 11% plus inflation last year when Fed only had us, the government numbers only had us at 9% or so, okay? But the bottom line is, trueflation numbers for most of the month of May, okay, which is what the numbers are going to be coming out in June in about 10 days from now, roughly, 10 days, something like that, right? For almost the entire month of May, we were in the 3s. And at the end of the month, we actually slipped down to the 2s. So I would say there's an extremely high probability CPI comes in as something with a 3 in front of it for the month of May, right? The numbers that are coming out here in about 10 days or so. That's the first thing to understand. And I think that's very important because clear as day, the trend is down for inflation, right? And so the second component is, a lot of people are saying, well, jobs numbers really good right now. Market's holding together really strong. Housing is, okay. So a lot of people are looking at all this and they're saying, why shouldn't the Fed keep raising right now, right? And not take a pause. My stance on that is, why did the Fed ever start raising rates in the first place? It was because inflation kept going up month after month after month, and it was clear this is going to be a problem, right? So now Fed funds rates is substantially above likely whatever CPI is, because CPI right now is probably high 2s, low 3s in reality right now. Fed funds rate is 5% plus right now. So why in the world would the Federal Reserve keep raising rates when it's clear as day the trend is down, right? It doesn't mean the Fed has to lower rates right now. They can save that for if they see some economic weakness in the back half of this year or something like that. If they see something there, jobs report comes in really bad, then they can start lowering rates, especially if CPI is heading our way. But why would you keep raising? It makes no sense. Then you're just asking to try to devastate the economy. And for what? For what? So then you can spend trillions of dollars saving the economy, because that's exactly what's going to happen if they had to do that. So then a bunch more banks can go under and you have to save the day there? Doesn't make sense, especially when CPI is likely about to come in at 2s or 3s. So, put the pieces together there, and that's a very frustrating thing I'm hearing talked about out there, and I'm like, it doesn't make any sense. People are getting very confused now at this point in time, the difference between economic numbers and inflationary numbers, okay? The Fed tries to control inflation, not is the jobs report too good. They can't talk about cuts yet. Why can't they talk about cuts yet? I think that's an important subject that's not talked about, okay? I'll tell you exactly why. The Fed cannot talk about cutting rates yet. They will be able to very shortly, as in the next few months, but they can't talk about it yet. The reason is because at the end of the day, CPI has been too high. Now, if we're starting to talk about 2s and 3s, that's a moment that the Fed can start actually talking about cutting rates. Fed funds rate barely got above CPI recently. The most recent government numbers that are obviously way backwards looking came in at 4.9%. Obviously, Fed funds rate's well over 5% right now, right? Finally, we got Fed funds rate above CPI. That's huge. Now, the bigger that gap gets, the more likely the Fed is to start cutting rates, especially if you tack on somehow jobs numbers coming in weak at the end of the year, something like that. A reason, other than inflation falling, that the Fed can say, you know what, we got to start cutting rates. And the market could be looking forward and saying, you know what, we think the Fed's going to, be cutting rates sooner rather than later, as in meaning the next 6 months. Whirlpool stock, WHR Whirlpool stock, okay? So looking to buy this one as a new stock here, okay? Whirlpool, I understand, not the sexiest company in the world, right? I mean, these are the brands Whirlpool owns. If you didn't know, it's a lot more than just Whirlpool, right? But Whirlpool has a lot of things going for them over this next, in my opinion, 24 months or so, that is a lot more exciting than meets the eye, okay? Here's the first thing. Now, remember the products Whirlpool ships around. Super heavy, big, bulky products, right? Remember what happened to freight rates, right? In terms of container rates, they went to the moon. And so anything that Whirlpool had to ship overseas or had to have shipped to them overseas, which is an immense amount of things, right? They were paying through the roof for pricing on all that in the back half of 2021 and all through 2022. Guess what? all the container freight rates have come down back to normal levels. This is going to be huge for Whirlpool's margins, in my opinion. And you're going to see Whirlpool's margins go up substantially over the next 12 to 24 months, in my personal opinion, on the back of this. Plus trucking rates. All these big washers and dryers and ovens and all this stuff they sell, right? It's got to get transported on trucks, right? And you look at trucking rates, they've come down immensely year over year. And so all this transportation will be reflected in their margins, and it will get a lot healthier place, okay? Now, on top of that, home sales have been awful, okay? Existing home sales have been awful. When you're under 5,000 units for home sales, you're kind of in like basically a housing recession at that point in time, which we've been under 5,000 for a while now, okay? Like pretty much, over a year? Now, when you go under 4,000 units, you're basically in a housing disaster. Now, the only reason housing prices haven't come down as much as the great financial crisis, for instance, is there was a whole different scenario with foreclosures and whatnot. But in terms of people moving, not a lot of people have been wanting to move because mortgage rates has just been so dang expensive, right? So why would you move out of your house that has a 2.9% mortgage on it, right? Because you refinanced. Or a 3% like everybody refinanced in 2020, 2021, right? Or the beginning of 2022. Why would you move out of that to go buy another house at a 7 or 8% mortgage? It doesn't make sense. But in my opinion, these 7, 8% mortgages, 6% mortgages are not going to last much longer, okay? And when those come down, the housing market's going to be boosted up in a major way, right? Trueflation is one of the best ways to look at, what's going to happen with inflation numbers from the government level, okay? And what we're seeing is trueflation numbers are now consistently coming in under 3% now at this point in time. So I would say there's a very high probability the Fed's going to lower Fed funds rate in either the third quarter, fourth quarter, and that will obviously be reflected, and that's going to affect everything. When Fed funds rate goes up or down, it changes everything. It can change credit card rates, auto loan rates, obviously mortgage rates. And so when mortgage rates come down, which I wouldn't be surprised if they come down a lot over the next 12 months, what's going to actually happen is the existing home sales is going to go up immensely, because then people can move and won't look at it as like, an impossible thing to do, right? Now, here's the other deal with Whirlpool. If we're looking at 2024 numbers, trading at about a 7 forward P based upon 2024 numbers, we could say, what if they did half that EPS? Half that EPS. Then I'm paying like a 14? That's still not a lot. So when I look at Whirlpool, there's a lot of protection here, okay? A lot of protection. Dividend yield 5+%. That's beautiful. So Whirlpool, not the most exciting play at face value, but when you look at the 5% dividend yield, when you look at how bad existing home sales have been, and those will improve, which will definitely help Whirlpool's numbers. When you look at the costs of their business coming down immensely for shipping anything, and obviously trucking, when you put all these pieces together, I can see Whirlpool's margins expanding quite rapidly over this next 1 to 2 years, and obviously their profitability as well. And do remember, at the end of the day, things break. So even if the housing market's in a weaker place for the rest of this year, which is definitely a potential, at the end of the day, washers, dryers, ovens, all that stuff breaks, and then you got to get new ones, right? And so I like Whirlpool. It's going to be a new one for me. You'll likely see it out there, okay?